Mike in Tokyo with a look at what is holding the stock market up. Nice to see you decouple today over there in Tokyo, Mike.
Yes, we like a spot of decoupling when it's in the positive direction. Benchmarks are recovering from yesterday's drop, which was the biggest for the Nikkei in 3 months. Property stocks surging. Morgan Stanley says they're attractive because tax exemptions coming in this month may raise demand for new homes. Also, Tokyo residential land is at the cheapest in 5 years, and those prices are starting to attract some buyers. Morgan raised its rating on home builder Sekisui House and Sumitomo Forestry to overweight from equal weight. You can see Sumitomo there up more than 12%. Financial stocks rising after Bank of Japan Governor Masaki Shirakawa indicated he may continue lending to banks and buying commercial paper from them. Those measures were due to expire on September 30th.
How the economy and corporate financing will develop is an important factor for the BOJ to decide whether to end those measures. We will do so in a way that market participants can predict.
The bank's monthly report is out today, but we already know what's in it. The bank said yesterday the economy is beginning to stop getting worse. If that makes sense, it is worse, but it's getting worse at a slower rate, and it may soon get better, but it's quite tenuous. The government releases its assessment of the economy today. Fitch says that it's going to keep Japan's sovereign debt rating at AA-, even though the government has now abandoned its goal of balancing the budget by 2011. Fitch says it recognised some time ago that target wasn't possible. The stable outlook suggests no change in Japan's ratings over the coming year. I am joined in the studio by Nomura Securities Chief Global Economist Paul Sheard. Now, not many people, I guess, Paul, thought that the government stood a chance in hell of balancing the books by 2011, but what dangers does this cause, having debt spiralling so much?
I don't think really there is much of a danger here. The key issue here for Japan is how to deal with another wave of deflation. The game of putting the primary balance, is really the primary balance, that is sort of netting out the repayments to the debt, in balance by 2011, harks way back to the Koizumi administration when they were looking 5 or 6 years out and thinking they'd have the situation under control. Obviously with the global recession and the financial crisis, it's a whole new ball game, and Japan's been dropped right in the middle of it.
Shirakawa said yesterday that deflation is a concern. Is there anything that the bank can do? It doesn't have much room to move now, does it?
Well, no, I think, you know, when you get to this kind of level, a kind of zero interest rates, basically a kind of liquidity trap situation, a deflation threat, you really have to have the monetary authorities working hand in glove with the fiscal authorities. Gets back to this point about the budget, and doing something perhaps a little bit out of the box, rather than sort of going back to what we had before, which was a kind of fairly sort of timid kind of quantitative easing.
Bernie.
Paul, Bernie in Hong Kong. Thanks, Mike. Paul, you know, the problem is in Japan there are structural and cultural reasons for the demise has been going through, and the fact that they never really got out of that sort of depressive funk. I mean, the birth rate is still negative. People just are not that gung-ho on having kids. And, you know, the things that Obama and the Americans are doing, looking for new sources of income to make up for falling revenues, you know, there's still this lingering talk. They might have to hike the GST in Japan. Are the structural problems, do they stand a chance, snowball's chance in hell, to use Mike's words, of going away or being obliterated at all?
No, I think you're right. You're putting your finger on the fact that there are these structural issues. Demography is really at the top of the list there, and also maybe some issues around the structure of the economy. But then you've got these macro policy kind of issues, and I think Japan has not really separated those two sufficiently and tackled the problems at different levels. So I think the structural issues, obviously you've got to work around them and hopefully put in place some policies that cope with them over the longer term. But I think rather than appealing to culture or whatever, you know, our view would be that Japan has really failed to implement a sensible macro policy mix over the years. You know, I think it's been shown the way by the US policymakers in that regard with how aggressive they've been in the last 6 months or so.
The government and the Bank of Japan both say it's too early to roll back stimulus measures. Now, Japan's long been a fan of pork barrel politics. We've got an election coming up. Any chance that there's going to be more stimulus?
Well, there could be more stimulus. Actually, in this crisis, Japan has put a lot of fiscal stimulus into the system. Under the Aso administration, they've rolled the clock back, so to speak, much more than perhaps you would have thought, given the earlier pushes from the Koizumi administration and even earlier to that. But I think too much really is sort of made of this pork barrel argument. I mean, if you go back to Keynes, remember, he had the tongue-in-cheek argument that you could bury bottles stuffed with cash in a deflationary situation and people would dig them up and that would be good for the economy. So I think, I think that, frankly speaking, this sort of being held captive to this argument that there are too many bridges being built to nowhere or roads to nowhere really prevented Japan from implementing a much more sensible fiscal policy response.
This is definitely a Titanic that does not turn on a 10 yen dime. Thanks for that, Paul. Thanks, Mike.